Jing, there is anxiety expressed, at least in the Western press, about China's ability to maintain at least an 8% growth rate with the various forces that are pushing and pulling, including inflationary trends. What's your outlook?
Well, I think in the shorter term, we're experiencing a kind of moderation in China's economic growth. But that moderation is because of the Chinese government's efforts to dampen inflation and controlling overheating. So in the next couple of quarters, we'll see economic growth coming down slightly from the torrid pace that we saw in the second half of 2010 and first quarter 2011. But by any measure, China's growth will still be very strong.
Is that primarily because of the interior sections of the country continuing to develop at a rapid pace?
Well, I think across the board, you're seeing, as we're starting the 12th five-year plan in 2011, we're seeing very strong investments in infrastructure across the country. We clearly are seeing wage growth feeding through to domestic consumption. We're seeing some kind of moderation in exports, but that's to be expected. So growth is coming from all sorts of regions, from all industries. However, I think the number one priority right now is to contain inflation. With that, we're going to see slowing growth in the coming 2 quarters. However, we still think growth will be maintained at above 8%.
Does that containment of inflation suggest there's going to be a definite tightening of the lending of credit in the country? And in fact, is the central government able to control the credit stock in the country?
Well, actually, credit growth has been coming down for the past 6 to 9 months now. The last reading we have in terms of credit growth, we are already seeing growth coming down to about 16%. And in fact, the May lending figures came in below expectations at around 550 billion RMB. So compared to 2 years ago in 2009, when credit growth actually went to 35%, we basically are indeed seeing a soft landing in China's overall credit growth.
How should investors, short-term and longer-term, look at this situation with regard to particular sectors?
Well, looking at the overall economy, I think investors need to position themselves in sectors that are related to domestic consumption. So by domestic consumption, I'm looking at several broad industries, obviously retail, but also entertainment, services, healthcare, travel. As incomes continue to grow across the country, as China puts a lot more emphasis on the growth of domestic consumption, in the coming few years, sectors that are exposed to the income growth, to rapid expansion of domestic savings as well as consumption will do very, very well.
Will this be a mix of domestic companies and multinationals selling into those sectors?
Absolutely, absolutely. I think you're seeing luxury goods doing very well in China. A lot of the Italian, French brands are doing extremely well. We're seeing luxury vehicle sales continue to outpace the sale of domestic vehicles. So that, of course, benefits international players. But on the domestic side, in terms of supermarket sales, department stores, shopping malls, as well as a lot of the e-commerce companies are also benefiting from the rising domestic consumption. So both international and domestic companies are benefiting quite significantly.
Now, you mentioned luxury. Prada had a very high-profile listing in Hong Kong that focused on not just the luxury sales market, but also the what had been a very hot Hong Kong stock market. That has cooled in a number of respects. Are you concerned that there is or was a kind of bubble in listings of Chinese companies or companies trying to sell into China in the Hong Kong market specifically?
Well, in the last several years, the Hong Kong market ranked number 1 or 2 in the world in terms of capital raising. And obviously, a lot of the listings in Hong Kong are from companies that are based in the mainland or companies that are exposed to China in terms of luxury goods or commodities. So I don't think there's a bubble per se because China's growth is absolutely sustainable. but also we have a number of companies, not just Chinese ones, but international companies that are now seeking to tap into the liquidity in Hong Kong and China. We're going into a bit of a slower period in the summertime. Typically, IPO listings slow down during the hot summer season, but I think that's going to pick up again sometime in the fourth quarter of this year.
There's also concern about the financial integrity of some Chinese companies listed here in the U.S. as well as Hong Kong. Any generalization you can make about the validity of the financials of these companies for the sake of investors who might be considering some kind of broad or specific Chinese play?
Well, I think investors obviously need to always be aware of risks wherever they're investing, whether it's China or the US or any other market. Every year we've got fraudulent cases, not just in China, but in other markets as well. So obviously one needs to study the reporting standards of particular markets. You need to interview management, interview suppliers and customers of the company in question. But I think in general, when we have tighter credit conditions in China, you do have problematic cases coming up. Because as the old saying goes, when the tide goes out, you can see who's actually exposed. So I think that's the situation we're in today. When credit has been tight for 9 months, 12 months, when cash flow becomes a bit of a problem for some of the smaller companies, you do have some companies cooking their books to try and inflate their earnings or cash flow.
As part of this broader macroeconomic story or picture from China, we also read in the West of various reports of incidents around the country and such that are concerning the authorities, some evidence of crackdowns here and there. Is that something an investor should be concerned about? There's no uniform answer to any situation, but is China basically a stable society?
Well, I think China by and large has been very stable. And we've had uninterrupted economic growth for the past 25 years. And one of the major foundations of that growth is a very stable political and socio-economic environment. Now, what we're seeing today is obviously a lot of global uncertainty. We're seeing China's income gap growing between the coastal region and the hinterland, between the haves and the have-nots. But the Chinese authorities have set out to address this issue in a very serious way. So in the coming few years, especially during the 12th Five-Year Plan, they are going to try and reduce that income gap, making sure that the prosperity of China is enjoyed by everyone, not just the coastal region residents. So we've got a very aggressive program to build low-cost housing, 10 million units this year. The central government is introducing health insurance to 90% of the population by the end of 2011. In addition, on July 1st of this year, China is enacting its first social insurance law, which means migrant workers can bring with them, when they go from province to province, their healthcare benefits, their worker employment benefits, and even maternity benefits. So all these measures, I think, will be very important in ensuring social stability.
The Chinese Party central leadership is also going to be changing next year at the 18th Party Congress. And there's some speculation on the part of pundits and the like that this new generation of leadership might be less committed to the sort of pro-business, pro-market reform agenda. Do you see any risk of that?
I don't see a lot of risk of China changing its policy. As a matter of fact, even though we have a leadership transition coming up in 2012 and 2013, I think the broad policy direction of China will remain the same. However, there will be some fine-tuning of China's policies in that we see more emphasis being focused on the hinterland of China, on creating a more sustainable path of growth, not just pursuing growth at any rate, but paying attention to the environment, for example, and paying attention to reducing the income disparity that we've seen in the coastal region and the hinterland of China.